Thank you. Now back to the volatility, latest volatility in the overall markets. Joining us to talk about key technical levels, Katie Stockton, Fairlead Strategies founder and managing partner and a CNBC contributor. Is this a completely separate event we're witnessing now from what we saw 6 weeks ago with the growth fears? Because it feels like we didn't get that totally behind us.
I would agree. I think that was the start of a high volatility cycle for the market. The VIX spike aside, which was obviously pretty major, we had already seen the volatility index lose downside momentum for some time. So we feel like it's a pretty meaningful shift. Usually the high volatility regimes last maybe 9-12 months. So we think it'll carry into early 2025. And with that, we've moved to a neutral long-term bias just to reflect potentially a range-bound environment. And I do think we're in store for a seasonal correction. So that would suggest that first pullback maybe was a little bit of a foreshadowing of things to come. And
the rebound that we saw might not be long-lasting, and it might not be built on a solid foundation, which we're starting to test right now. So do you think we get below the what are we calling that break? When was that? What 6 weeks ago was?
Around like 5,200 or so. So it was right, sort of a volatile.
So we make new lows from where we were there.
I think
the VIX
we probably
won't make
will.
New highs, though. Will it?
No, but the VIX tends to see these aftershocks, right?
Yeah.
So we are expecting aftershocks as part of the higher volatility
like 30
cycle.
on the VIX or something.
Easily, yeah. And with that, I think we'll see this relief rally, which is a bit of a gift from the market for folks that hadn't reduced exposure already. It's an opportunity to reduce, especially to the semiconductors that are exhibiting at times, including yesterday, downside leadership. So we feel like it's a good opportunity to reduce some exposure,
That's
just
really
partially.
Other people look at this. We just had Paul Meeks on. Exactly. He said, this is a buying opportunity. You look at it as, the upside was your selling opportunity.
Yeah, and there are signs of upside exhaustion across time frames for NVIDIA and others. So, in fact, having scanned the S&P 500 yesterday, I felt that large cap technology was probably the best source of short opportunities. We feel like the rotation on the sector front is really meaningful as well. Utilities, REITs, healthcare, staples, we're now overweight those sectors in relative terms. It doesn't mean they go up strongly from here, but relative performance from those more defensive sectors, probably we'll see a little bounce in yields, but then that should fail. And it's very seasonal, what we're seeing.
Tom Lee yesterday sort of got very similar comments to some of the things. He said 8 to 10%. You think we get more than that on the S&P?
I think it's around that as well. The initial support is around 52,200 based on those lows. We think it could go even below 5,000, but probably briefly based on secondary support and simply based on where our indicators stand, which they're still pretty overbought, right? Of course, with this relief rally, we still have an overbought condition to contend with, and it usually takes several weeks to come out of that. So I think the messaging is that the secular bull trend is still very much intact, but maybe a cyclical sort of trading range might unfold here, and to wait to add exposure.
Can you tell from the where the weakness is concentrated, whether... I'm going to ask you a fundamental question. What's causing this? Is it a growth fear or inflation fears at this point? Can you tell from the...
Well, I'll go back to market sentiment, which is the driver of pretty much everything, right? Yeah. The sentiment had gotten pretty, overly bullish or extremely greedy for the large cap tech space. Yeah, and they have tended to exhibit upside leadership and downside leadership. So I think it's that so-called big rotation, probably coined here, that is real, and it should benefit in relative terms.
What's causing that, growth or inflation?
Oh, well, I would think growth, but that's
growth
just
worries,
my opinion.
Growth concerns.
Yeah,
well, yeah, I need that. So. That's what I was looking for. I wasn't asking you for your opinion. I'm saying if you can look at your indicators to see whether it's an inflation fear or a slowdown fear.
We also watched the growth value ratios very closely, and the retracement was massive in that sort of ratio or relationship. And we think it's something that will continue during a corrective phase. It shouldn't be long-lasting. But the shift is meaningful out of the AI names. We're even seeing that in other sectors of the market, AI-related
How about
names.
oil? They gave me one more minute.
Yeah, so
is oil going to break down below 70? Yeah,
so it's taken out just in the past week or so, the bottom boundary of its long-term triangle formation. And if it confirms, meaning kind of closes there this week and next week, that's a major breakdown for crude oil prices that we weren't anticipating. So the long-term range, which has been neutral, is now potentially a breakdown. So we're watching that very closely. It is oversold short term, so it has the potential to bounce here and avoid that confirmation, but it's pretty tenuous for crude oil bulls.